Kristen, in these days, is your phone ringing off the hook? How much are we going to see these sort of 3% whipsaws?
I think volatility, unfortunately, at least in the short term, is here to stay. And I think what we're seeing in the markets, particularly today, is that we have to acknowledge that the world, the global economy, and what markets are facing is markedly different than what we thought even a month ago or 2 weeks ago, for that matter. And I think what the market is really grappling with today is when we were discussing the conflict even last week, it was the idea that some of this could be particularly, the impacts could be regionalized. And I think now that the information coming out about that Russia oil exports are equal to about 9% of global consumption, the impact on agriculture, looking at Russia and the Ukraine comprising about 20% of global exports when it comes to wheat and corn, and that extending into base metals and areas like neon gas and titanium, all of a sudden this is going to be felt in broader markets than just simply oil and gas.
Do you think there's a way to buffer against that right now?
So a lot of the price action that you're seeing today, I think, is investors trying to put on inflationary hedges. So I heard you talking earlier in the program about the oil field servicers, and that's an area where we added exposure today. And we actually think that that could continue to ride up because the Western world is going to have to make up for this lack of output in terms of what's happening in Russia right now. Yeah. So that's one area where you're seeing that. Yeah. Another area, too, which is interesting, is natural resources, which hasn't quite caught a bid, but I think it's again that extension into the broader commodities sectors and not just an energy story.